while I might not be able to judge the AI offerings of treatment.com, the market position of Rocket Doctor, the company they acquired, is so compelling and so powerful that, even if management team was having a hard time executing, at some point, somebody like, Sequoia or Kozla Ventures or Andreessen Horowitz would come in and say, like, no, this is a network. This is what Silicon Valley does. This is what we'll pay $1 billion for. At some point, somebody's going to see their traction and have to jump in, because it's too powerful to miss out on a network.
This video is disseminated on behalf of Rocket Doctor AI.
Welcome everyone, this is Mariusz Konieczny. I'm chatting with Steve, the unemployed value degen. And this is an interesting interview because Steve did some research on Rocket Doctor AI, and he learned about the investment opportunity from me. And I thought it would be a good idea to speak with Steve about his journey of how he researched the company, what he learned through the process, because we should all be doing a lot of due diligence before we buy the stocks of our choice. So Steve, thank you very much for joining me.
Thank you, Mariusz, for having me. It's a pleasure.
So you wrote 2 articles on your Substack about Rocket Doctor AI. So walk us through the process of your journey, starting with, how you heard it from me, and then how you took it upon yourself and where it took you, what you learned.
Well, I am a value investor. I'm looking for things that are mispriced. And a lot of times people want to see something that's mispriced on price to book or price to sales. It's very, very hard to value a growth. But and you'll see growth investors, they'll buy Palantir at 150 times sales or something like that. I think growth is very hard to price, but sometimes you can find mispriced growth. And if the growth is mispriced, then I think it's a value. And also there's market position. If a company has a moat, it's very hard to put a value on a moat, but sometimes a moat can be mispriced. So a lot of people ask me, what do you see as value in, this micro cap, early stage AI tech growth company? And I also believe in circle of competence. And so some things are very hard to look at when it's outside your circle of competence. But Peter Lynch was big on this. As a consumer, a lot about these industries. I've been to the doctor how many times in my life, and so I know that process of going to the doctor and what it's like. And I've used teledoc through work, and I've used some of these, online virtual things. So, with a little bit of circle of competence, and then seeing their market position and what I think their growth is, I thought it was a deep value. I thought it was underpriced. But when I worked at Merrill Lynch, one of the first things they taught me is, there's 2 kinds of people, the greedy and the fearful. And seeing how undervalued is the greedy side, and then the fearful side is, what are all the dangers? What could go wrong? What are all the threats? And I looked at those, and there are some speed bumps in the road, but management, I think, is doing a pretty incredible job addressing a lot of threats. So I don't usually write about micro caps, because that swimming pool is filled with sharks and piranhas. Microcaps are, what is the Star Wars line? It's, you're going into the Star Wars cantina, right? It's a dangerous place, but there are some amazing opportunities out there. And I think, and I really appreciate you telling me about this one, because I think it's a really good one. And I usually don't go down market into microcaps too often.
But when I told you about this idea, like the day later, I saw an article written about it by you, and I was like, wow, this guy's fast. But you wrote your first article before you had a chance to speak with the management. And I believe you had a call with the management. It was like an hour long. So what did you learn from the management that maybe you didn't understand when you wrote the first article?
Well, management has done a good number of interviews. There was a lot I understood about the nature of the business. But one of my concerns, I think this is true in, there's not that many newspaper companies anymore, But when you looked at old, publishing companies, magazines, newspapers, you looked at medical companies, there's just, there's just a limit to human talent. When you've got companies run by doctors and they spend 8 years going to medical school, it's pretty common for doctors to not be good business people. And so when you have a company run by doctors, I really want to jump in there and say, okay, are they going to be any good at business, or is this company doomed until they hire a professional CEO or something like that? So I wanted to find out not so much about the business, because they've done a pretty good job, I think, telling their story on other interviews. I wanted to know about the people involved and if they had what it took to get the football over the next goalpost, or maybe to the finish line. And you're also trying to judge character. You're also trying to. I've one time I interviewed the CEO of a company. It was a renewable energies company, and one of the amazing things, and this is not true in every case, but sometimes when you're dealing with a swindler, they'll even advertise to you that they're a swindler. They'll just try and convince you to get in on the swindle against other people. So sometimes they do you a favor and even tell you that they're. Charlie Munger used to talk about this. He had somebody offer him to invest in insurance business. It was fire insurance for houses that were already flooded. And so you knew, the guy is essentially advertising that he's taking advantage. And so if you're not smart enough to ask yourself, well, if he can take advantage of them, can he take advantage of me? And not every swindler does this, but there's a good chunk of them that to sleep well at night, they tell you what the game is. And if you're not smart enough to figure out that it can be turned on you, then it's on you. So I wanted to meet the management, try and judge their character, try and judge if they had, the right plan, the right strategy, if they could get the football to the next goalpost. And I did like a lot of what I saw. I wouldn't say every red flag is removed, but a lot of it I think are a lot more balanced after I got to meet them. Now, it's their job to sell me, right? The CEO's job is to sell me. So I have to be on my guard. But my biggest concern, that doctors are just fundamentally not good business people, I think that's pretty well taken care of. So you have, Rocket Doctor was in the very first class of Google's AI native incubator. That's a pretty powerful indication that they're aware of what's going on in that business world. They're aware of what it takes to get their company to the next level. They're getting good advice. They're getting good information. They're trying to make good decisions. But yeah, it was I think a positive experience overall.
How would you describe the problem that the Rocket Doctor AI is addressing?
Oh, just the market fit. And they started in Canada, but I think it has a much better, a much more important value added in the U.S. In the U.S., the healthcare system in the U.S. has been, kind of getting shackled with all these problems, pretty much ever since World War II. In the Great Depression, the government put in, for a while, wage controls. They told companies you can't give your employees a wage increase for a certain number of years because there was price controls in place. And that created a culture where your employees are getting better every year. They're getting more trained. They're getting more productive. You have to do something for them, but you can't pay them more because of a wage control from the Great Depression. It created this culture of giving benefits. And now in the U.S., somebody's health care is tied to their job, and that was reinforced by giving employers a tax advantage for doing it that way. And it creates this world where you have I'm buying, he's paying. And whenever you have, and this has now been going on for 80 years, you've got this system, I'm buying, he's paying. And whenever that happens, it's cost is not an object, and the costs have exploded. Then on top of that, you have the regulatory burden, which was already bad, but it's only gotten worse with Obamacare. And now you have this system where for every one doctor, you've got 5 administrators. You have to hire somebody to deal with the insurance companies. You have to hire somebody to deal with Medicare and Medicaid. And then the government has to hire somebody to deal with the doctor's administrator, and the insurance companies have to hire someone to deal. So just to have your annual checkup, it has to go through, 5 paper pushers. And that's what's really driving up the cost of healthcare. And people were worried about the cost of insurance, but the cost of insurance is high because the cost of seeing a doctor is high. And the cost of seeing a doctor is high because before you get to the doctor, a piece of paper has to pass around, 5 people before you see them. So, the doctor would be happy with $100 for a checkup if they were totally independent. And there are some doctors that go totally independent. They only take cash. They don't do any insurance or Medicare or Medicaid. And they just love it because they don't have to have this enormous staff for their small business, but it really limits their pool of clients. So a $100 checkup turns into a $300 checkup by the time you have to pay the salaries of those 5 people. And it's completely unnecessary. The U.S. is spending 13% of GDP just to have worse outcomes than the rest of the developed world. And I don't think that's sustainable. I think this is something that's going to get a lot of attention. Probably after the midterms, this is going to be an area of focus for the administration because they were talking about repealing Obamacare at some point. And you saw Trump try and go in there and lower drug prices too. But what Rocket Doctor does by trying to be the Shopify of independent physicians is imagine you're this independent physician that's had it with the corporate world and you're willing to say, look, I'll only take cash. I'll only see people that want to pay me $100 cash for a checkup. You can be on their platform, still have no administrative staff, and Rocket Doctor is being really smart. They're targeting Medicare, Medicaid, and I didn't even know this was possible, but the Veterans Affairs system. So they're now approved for VA benefits in California. So an independent physician who is in this position, like I'll only take cash, I don't want to deal with any of this nonsense, can be on the Rocket Doctor platform. And Rocket Doctor is going to keep 17% of the checkup amount. But now you can see Medicare, Medicaid, Veterans Affairs patients, and some insurance carriers as well, without having a single administrative staff member. The Rocket Doctor is going to handle all the credentialing. They're going to handle that entire back end for you. And it's just such a liberating market fit for a system that is so completely broken in the U.S. And that's even before you get to, because this can work for in-person visits too. This is before you even consider, remote telehealth type stuff. This is some of the Rocket Doctor doctors in Canada. They are for 20 specialist locations. That's physical in-person places where people go to see the doctor, but they're on the Rocket Doctor platform. And however bad the regulatory burden is in Canada, it's much, much less bad with their single, socialist system than in the U.S., which is just clogged down by 80 years of growing bureaucracy and bad incentives. So, I mean, the need for the product is just so enormous.
How do you view the AI part of Rocket Doctor AI? How does it fit into this whole thing?
So back to circle of competence, I am not great at AI, but every once in a while I get lucky. And what I have seen just by being in capital markets all day and looking at a lot of companies is that there's very good odds the next big theme after the data center build out is going to be what they call agentic AI, all these agents. So you're starting with these large language models. You go to the Oracle and you can ask it any question. But then this thing hallucinates and gives bad answers some of the time because it's difficult to program something that can handle everything. But it's not that difficult to program something that can handle a very specific niche case. For example, an AI platform that handles, civil law for the state of Florida, and you've uploaded every court case in Florida throughout Florida's history, and it has a full knowledge of every precedent ever set in the state of Florida. AI can handle that a lot more easily than uploading all the information for all of humanity for all time. So this niche use case is called agentic AI. There's going to be agents. And the medical profession is a pretty choice space for this, of making medical agents, which use, much less processing power, much less compute, because you're dealing with a smaller set. Now, again, AI is not my strong suit, but I think every once in a while I get lucky and find a bone, and I think that is the next big trend. That's what people are trying to move to now, because the data center build out, a growth story falls apart when it stops accelerating. And there's going to be physical limits to how many gigawatts of data centers you can put online every year. I think in 2025, they're doing 7.5 gigawatts of new construction started. 2026, I said it might be 10 gigawatts of new construction started. But it might flatline at 10 gigawatts a year for several years because there's only just, so many power plants you can bring online. It's just physically deploying this stuff is not easy. So when the growth stops, I mean, it's still growing, but when the growth stops accelerating, it creates a growth trap. It's hard to keep those valuations, those multiples without acceleration. And the market's already looking for some of these, what's going to be the next big trend. And the next big trend is how to take AI and really dramatically increase productivity. And if you can handle a lot of the back end work for doctors, right? So, for example, and there are other companies doing some things like this, but especially if it's a telehealth or remote call that's being recorded and AI is making a transcription. Well, instead of the doctor typing notes, you have a full transcription of every word said between the doctor and the patient. So that's automatic notes. So the doctor doesn't even have to go in there and create their own notes. And if AI is smart enough to take out the most important bits and summarize it, it's even better. That's not too challenging of a task right now. When I upload a video to Substack, I get a free transcription uploaded. And taking that and trying to summarize the critical points is not, that's not an unreasonable thing. There are other aspects to it, like diagnostic tools, and there's the two halves, the two companies. Treatment.com acquired Rocket Doctor. I'm much more, I think, able to judge and much more excited about the market position of Rocket Doctor than the AI capabilities of Treatment.com, because the Shopify of independent physicians is such an important thing. I can kind of value the company based only on that and treat the AI offerings of Treatment.com. To me, it's kind of bonus. It's kind of gravy, because I'm not good at valuing AI. And I mean, what's so important about that is, and this is sort of old Silicon Valley now, when you have a self-reinforcing feedback loop, you can create a network good. It can become a winner-take-all market. And not every market is like that. So there's a huge retail following for hims and hers, where it's this, it is telehealth, right? You go on, you get a call with a physician, and they can prescribe you your hair loss medication, or they can prescribe you your erectile dysfunction pill. But it's not a network in the sense that Uber is a network. So Uber, right? The taxi drivers want to be on Uber because they have the most riders, and the riders want to be on Uber because they have the most taxi drivers. That's a circular logic. That's a self-reinforcing feedback loop. That means Uber is much more likely to be a market where it's winner take all or winner take most, right? You get the winner, and then Lyft is kind of chasing for scraps. Hims and hers isn't like that. There's no benefit to you from getting your erectile dysfunction medication from the same pharmacy as your friends, right? I love SoFi, the new neobank, but there's no benefit to having your bank accounts at the same bank as your friends. There's no network there. You might have economies of scale, you might have cheaper advertising, but there's no reason, there's no self-reinforcing feedback loop why you would want to use the same app as your friends. But with Rocket Doctor, the patients are going to want to go to where the most doctors are, and the doctors are going to want to go to the most patients are. So Rocket Doctor has the real capability to be that self-reinforcing feedback loop network, and that is an extremely valuable place to sit in the market. That is choice real estate. And some industries don't even, banking can't be that. The hims and hers isn't that way. There's such a rare thing to have that ability, and to have nobody else even thinking about it yet, and maybe be a minimum of 2 years away from being able to effectively compete with you over it is pretty fantastic. While I might not be able to judge the AI offerings of Treatment.com, the market position of the Rocket Doctor, the company they acquired, is so compelling and so powerful that even if management team was having a hard time executing, at some point somebody like Sequoia or Kozla Ventures or Andreessen Horowitz would come in and say, like, no, this is a network. This is what Silicon Valley does. This is what we'll pay $1 billion for. At some point, somebody's going to see their traction and have to jump in, because it's too powerful to miss out on a network.
I find it interesting that you're talking like this, because I was speaking with a different individual, and I told him about Rocket Doctor, and after he learned that Rocket Doctor had only $2 million of revenues, he literally laughed at me. He laughed at me, right? And yet you look at it so differently. And also you look at it as a deep value. Like the same person would look at you and would laugh at you. How can you see a deep value in a $2 million revenue company trading at, 50, 60 million? Like, where's the deep value?
Yeah, I mean the deep value is in the network, right? To have a position where I wrote about Open Door in June of 2024, and Open Door had the same characteristics that if you could possibly make a world where the home seller is listing their house on your website because the home buyers are there, and the home buyers are coming to you because the homes are being listed on your website, they have a chance to replace this. In the US, everything's listed by the NMLS database, the National Mortgage Listing Service. They have a chance to totally disrupt the paradigm and upset the entire way that houses are sold in the US. And that's a $2 trillion annual industry. And now you've got, the managing director of Kozla Ventures as the former co-founder as the chairman of the board, and the COO of Shopify coming to be the CEO of the company. So I wrote about it before this new management team switch because of the potential, because of the market position. But I acknowledged the current management team at the time was not doing a good job. They were not delivering on that promise. They were not executing. But if they ever did execute, that market position was incredibly undervalued. I mean, there's not many companies that could possibly be a 50 bagger. I mean, there's a lot of, I wrote about this morning a frozen food company that could be a 3-bagger. Finding a 2-bagger, you can find a lot of them. Finding a 3-bagger but finding a 50-bagger is so rare. And it seemed like all Open Door needed to do was replace management, and they did it. So I have that on my Substack from June. I took the paywall down so people could see it. June of 2024. This is a very similar story, except that management is already delivering. So we only have 1/4 of public financials after the merger between Treatment.com and Rocket Doctor. But we have public statements from the CEO of Rocket Doctor, Bill Cherniak, which if they're factually incorrect, he can be sued and fined over, right? He's not allowed to make, those incorrect public statements. It's one thing to say, oh, these are bad forward-looking statements, but he said in February 20th, they had done 500,000 visits, and October 16th, they had done 700,000 visits, or more than 700,000 visits. So we can kind of guess what the growth rate is. And in Canada, they charge about $9 Canadian per visit. In the US, they're going to charge, I think, 17%. And so in the case of California, a visit is $100. So it's going to be $17 US. So the revenue will even go up beyond that. But even if those visits were only in Canada and they were $9 Canadian a visit, based on those statements, you can estimate the growth rate. And so management is delivering, at least, again, it's hard for me to judge AI. The Treatment.com half of the business, it's still a little bit of a question mark to know if that management team is delivering, although they did win a $2 million grant from the NIH. So they must be delivering something, even if that's just medical doctors able to impress other medical doctors. So again, the Treatment.com half of the business, I have my reservations. Are these people good at business? Are they going to deliver products people are going to buy? But the Rocket Doctor half of the business, Bill Cherniak is delivering. They're penetrating the market. And this growth so far, they've done it just purely through word of mouth. They haven't spent any advertising yet of their own money on Rocket Doctor platform. They won a $1 million grant in the state of New York from CVS. So CVS Health is going to give them $200,000 a year for 5 years to pay for advertising. That started in July. So they are now advertising since July with other people's money. So at least they can get an estimate for their customer acquisition cost and things like that. And but it's fantastic as CVS is paying for it. And CVS isn't even a supplier. They're not even selling anything to Rocket Doctor. They just want the benefits of lowered cost and better taken care of patients. So companies are willing to throw a couple $1 million at this company just in the potential that you can lower the cost structure of our broken healthcare system. But with the CVS healthcare money in New York, they're having something like a customer acquisition cost of $3. And then even in Canada, the very first visit is $9 Canadian. So they're, immediately profitable on the first visit from their customer acquisition cost. So it's just fantastic metrics, fantastic levels of growth. I I wish that I could, download the app and see how it works, but I'm not a doctor. So the last trepidation I have is kicking the tires and actually seeing the product in action, seeing how it works. And so, with I wrote about Portillo's. I went to Portillo's and I tried the hot Italian beef sandwich. I went to Crocs. I went to the store. I tried on the clogs. The last obstacle is, maybe could I someday talk to some of these doctors and get their feedback and see how it's going, do a real channel check. And I don't know if that's going to be possible. I emailed the chief operating officer, but if with any good fortune, I'll be able to write a part 3 write up on this company if I can talk to some doctors that are actually using the platform.
What are your thoughts on all these insurance companies signing up with Rocket Doctor and Rocket Doctor being on in network with them?
And that's very powerful, and it's also a sign that, and I'm maybe being harsh here, but I'm trying to be objective. That the doctors are good at doctor things. Where's the evidence they're good at business things? These doctors that are running Rocket Doctor, they're able to integrate with insurance and get approved. That's typically a 2 or 3 year process. That's not a fast process to get approved by insurance. So if another AI native company, right, if some tech bros in Silicon Valley that were better at tech and better at AI learned about this market and tried to compete with them, they'd now hit this wall of trying to get approved by health insurance. And not that they're not capable of doing it, just that it's a difficult 2 or 3 year process. So seeing that they've hit those milestones, one is they've been working on this for years already, and two is they're able to get approved. They're able to convince Medicare to rubber stamp yes. They're able to convince Medicaid. Now they're in, I think, Aetna, Humana, UNH, and another. I mean, they're now in network for 13 million Americans. And one thing is, once you get approved for Aetna in New York, well, then it's more easy to get approved for Aetna in other states. And once you get approved for UNH in California, it's easier to get approved for UNH in other states. So these are huge carriers, and now they call it the camel's nose under the tent, right? You can get into that market much more easily. So it is trying to add up all the evidence. Our management doing things well. It looks like they have a smart plan. They're executing that plan, and I was impressed. I didn't know why originally they chose New York, California, and Maryland as their initial states, but then I tried to verify this as best as I could by somebody. Again, this is outside of my circle of competence for a lot of things, but Maryland in particular, they have this world where all Medicare and Medicaid patients are on this united care platform. So once you're approved in that, you have access to all the Medicare and Medicaid patients in the state. And they also have a pay cap. So the cost for private insurance and Medicare and Medicaid is the same for everybody. So it makes it, their strategy was that they want to have enough coverage in the state. If you have Medicare, Medicaid, VA benefits, that's half of the market. And then maybe if you get a few of the large insurance companies, maybe 80% of the people in the whole state are capable of being your client. So then when you start turning on the advertising spigot, when you start running Facebook ads and trying to reach these 70-year-old people, does every pair of eyeballs that sees your ad, are they eligible to be a customer? And so they're on that path in New York, California, and Maryland that by the time they turn on the advertising spigot, the vast majority of people who see those ads can sign up and be a customer, so that they're not, wasting their money showing their ads to people who can't actually even be on the system. So that's just
Wow.
another bit of evidence that they're doing things intelligently. They have a plan. They're executing on that plan. So I'm trying to judge management and say, are these guys, do they have what it takes? And so there's not a lot of evidence with only 1/4 of public filings, but there is some evidence that they're doing things in a smart way.
Well, you clearly have done your work. So my final question is, do you have any final thoughts for my audience about Rocket Doctor or how your research went?
Yeah, no, yeah, it's the greedy and the fearful, the bull and the bear, right? The on the bull side, the opportunity to be a network, to be the Shopify of independent physicians, or to be the Uber of and the founder Bill Cherniak, he hates that. I haven't met him or spoke to him, but I heard secondhand that he hates the comparison between Rocket Doctor and Uber, because I think doctors don't like to think of themselves as on par with taxi drivers. But my understanding is of the tech space. You're going from this Web 2.0 world and Web to a Web 3.0 world. And again, this is not super within my competency, so I sound like a little bit of silly saying it. But this transition to a gig economy, where at first that was kind of derided, like, oh, they're losing benefits, they're not employees, this is terrible. But as the gig economy has matured, what's amazing about it is those gig economy workers, they become entrepreneurs in their own mind, right? They become capitalists. They become business owners with their own capital at risk. And what started out, I think, derided as a sort of, gig economy, they don't have benefits, they don't have an employer sort of thing, I think is transitioning to a world where it's going to be much more common for people to be owner, operator, entrepreneurs of their own small business with these back-end platforms, right? So as the gig economy world evolves to things like, it started out sort of low end. Now I think it's going much more high end, and I think that is a major trend. So when you think about, how to skate where the hockey puck is going, one of the places the hockey puck is going is for even skilled labor, even high end work, to be a part of this experience where, the Web 3.0 platform is empowering you to make a lot of money, and then they're keeping a small percentage, as opposed to the previous platform. Uh, One of my subscribers thought, 17%, that's an enormous take. Well, look at YouTube. They take 30% of those super chats, right? So the Web 2.0 economy, where you have this centralized, powerful system, is able to squeeze and extract all this value from the creators and from the entrepreneurs and things like that. The Web 3.0 world is, a much smaller take with a lot more value added. And then the person at the other end of it receive so much value out of that relationship. I mean, the customers that use Shopify are thrilled that they have all this support for their small business at I think, a very low price. I feel that way for Substack. Substack keeps 10%, while YouTube is keeping 30%. I couldn't be more thrilled for Substack to keep 10% when at least a third of my subscribers found me through their platform. I mean, 2/3 find me through Twitter when I'm typing stuff out, but a third of my subscribers found me from within Substack. So they grew my business for me by a third, and they just keep 10% of revenues for all of that back-end support. So I'm thrilled about that. And I think that's a super trend. So agentic AI is a massive trend. This Web 3.0, the empowerment, the transition from gig economy to empowering owner operators is a massive trend. And I just think, it does only have $2 million of annual revenue at this moment. But if you extrapolate the 700,000 patients that Bill Cherniak said on October 16th, I think they're already closer to about 3.5 million annual revenue already. That could be as high as 4. And at that growth rate, they're going to be at 10 million revenue sometime within 2026. And it would only take about 10 million annual revenue to get past break even. And if companies with that kind of growth rate and those kind of margins, so in tech, they have these rule of 40 companies, and Palantir is what they call a rule of 80 company, where the margins and the growth rate, you add them up, it comes out to a number over 80. And when you have a rule of 80 company, where their sustained growth rate and their margins add up to be more than 80, the price to sales ratio that those companies sell for are between 12 and 20 times. So if Rocket Doctor is able to do 10 million in annual revenue at some point in 2026, that's already a $120 to a $200 million market cap company. If by, standard SaaS tech valuations, sometime in the middle of next year, which is pretty. And another thing, one of their competitors, ADA Health in Germany, in the 2024 year, once they had finally got all their credentialing done and turned on the growth mode, they had 260% revenue growth in 1 year. And I think that's once you get through all the credentialing and you're approved for all these insurance companies and you have the word of mouth growth and the platform is scalable and you turn on advertising, having growth grow a couple 100% in 1 year is very possible, right? It's not like, I wrote about Portillo's. Every restaurant they build, the old cost was $6.8 million per restaurant. It takes a year to build. They got to find the land. The tech world is so scalable The marginal cost of a new customer is zero. So the ability to, you know, $2 million revenue is pretty small, but the ability for that number to change is way easier in software than it is for cheeseburgers and hot dogs and milkshakes.